Yesterday, we made a video on Visa going over the stock's fundamentals as it's hitting brand new 52-week lows. We then got a comment from Marco asking us to compare Visa to Mastercard, which we think is a great idea. So in today's video, that is exactly what we are going to do. Let's compare Visa to Mastercard and see which stock is better and which is looking more attractive now that the market is selling off dramatically and both of these stocks are hitting brand new 52-week lows. So with that being said, let's just hop right over to the Stock Unlock platform. And what I want to do first is actually take a look at our Stock Unlock insights, and I want to compare Mastercard with Visa, which we can do by simply hitting the compare mode and entering in Visa right here. Now we're comparing these two companies' Stock Unlock insights, which scores and grades all of their key fundamental metrics that investors care about. Right here, we can see that both of these companies have dividend scores of 4.8 out of 5, which is almost perfect. Both of these companies are currently trading below their 5-year average dividend yields. So right now, buying these stocks will mean that investors are getting higher dividend yields than the stocks have offered over the past 5 years. Also, both of these stocks' dividend per share are growing very well. They've been growing consistently over the past 5 years. The payout ratios are very low, and the payout ratios are also decreasing. So when you see a high dividend score here on Stock Unlock, basically what that means is the dividend is growing quickly and it's very stable. And the dividend health essentially is very strong. Both of these companies are the exact same here for the dividends. 4.8 out of 5, very good to see. Now, if we take a look at the profitability scores, both of these stocks have a perfect 5.0 out of 5. They're both ridiculously profitable. They both have operating margins well above 50%. Visa actually has a higher operating margin though at 67% versus Mastercard's about 57%. If we take a look at the free cash flow margin, Visa also has a much higher free cash flow margin at about 57% versus Mastercard's 43%. So overall, it does look like Visa is the more profitable business, but seriously, both of these companies are ridiculously profitable. If we take a look at the financial health, it looks like Visa has more intangible assets on their balance sheet and a lower tangible book value. However, Visa is buying back more shares, and they've bought back 2.5% of their shares over the past year, whereas Mastercard has only bought back 2%. And in my Visa video that we made yesterday, I highlighted that Visa is much more focused on buying back shares than paying out a dividend, and Mastercard is the exact same way. So these companies' free cash flows, instead of using the cash flow to pay out a dividend to shareholders, what they like to do instead is buy back shares, which puts upward pressure on the share price, which ultimately means that these companies are more focused on growth than income. That is the exact same thing here with Mastercard. Both of these companies are honestly very, very similar. Now, let's head down to the analyst section because both companies have a 4.4 out of 5, which is pretty good. It looks like analysts are expecting Visa to grow their EPS more over the next year at about 20%, but it looks like they're expecting Mastercard to grow revenue faster at 17.6% versus Visa's 14%. It also looks like analysts are expecting Mastercard to grow EBITDA faster, and it looks like analysts have a higher average price target for Mastercard as well, with 51.6% upside versus Visa's 48% upside. But honestly, these two companies are so similar. Like when we're taking a look at all these metrics and insight scores, very, very similar companies. Now, if we take a look at the growth score, there we go. We finally have a little bit more of a discrepancy here, and Mastercard does have a better growth score than Visa, but only slightly. The revenue is growing faster. The operating income is growing faster. The net income is growing slightly faster. Operating cash flow is growing faster, and free cash flow is also growing faster. Both of these companies' book value and tangible book values are decreasing. This is probably because the company spends so much money on buying back shares and paying out dividends that their cash position lowers, and that ultimately causes the book value to go down. That is just my speculation. Anyways, when we take a look at these metrics, it's very clear that Mastercard is the faster growing company. Revenue, operating income, net income, operating cash flow, and free cash flow are all growing faster than Visa, and in some cases quite substantially faster. It does look to me like Mastercard is the faster growing company. Now, if we look at returns, Mastercard has a perfect 5.0 versus Visa's 4.8. ROIC, ROCE, return on equity, and return on assets are all significantly better over at Mastercard, which means that this company is better at investing its money into growth and investing the money within itself to produce returns for shareholders and ultimately for the company. When we take a look at our Stock Unlock insights, basically what I'm seeing is Mastercard is slightly better at deploying capital. It's growing more rapidly, and the company is slightly less profitable though. As we saw up here with the profitability margins, Visa does have higher margins. So, and it's a very nice dividend paying company. So ultimately what I'm noticing is essentially just Mastercard is growing more rapidly, but Visa has higher margins. Now, the next thing we're going to do is head over to our Freeform tool, which is a tool that's basically designed to compare almost 100 metrics on any number of stocks now. So what we're going to do is compare Mastercard to Visa in the Freeform tool. And the first thing we're going to do is take a look at these two companies' revenue growth over the past decade. Why not? All the way up to 2012. And what we can see right here is that Mastercard has grown the revenue over the past decade slightly faster than Visa. So let's zoom into 2017. And over the past 5 years, Mastercard has actually been growing revenue quite substantially faster than Visa at a 13.5% compounded annual growth rate versus Visa's about 10.8%. So Mastercard has grown its revenue over the past 5 years at about a 3% faster rate than Visa, which is pretty significant. If we take a look over the past 2 years, Mastercard is growing faster. Over the past 1 year, Mastercard is also growing much faster. Basically, again, just when we take a look throughout history, it does look like Mastercard is the faster growing company and the revenue is definitely growing faster. And it looks like the revenue is actually accelerating because over the past 5 years, Mastercard's revenue growth has really accelerated above Visa's. So now let's take a look at the free cash flow over the past decade. And Visa over the past decade has grown free cash flow more rapidly. If we take a look over the past 5 years, same story here. And if we take a look over the past 2 years, same story. And over the past year, finally, it looks like Mastercard is growing free cash flow faster over the past 1 year. But it actually looks like Visa has been able to grow its free cash flow much more rapidly than Mastercard. So that is very interesting. Now, another thing that I want to take a look at is the stock price returns of these two companies over time. So let's take a look at the past decade once again, and we can see that Mastercard's stock price has grown faster at about 23.6% versus Visa's 22% over the past 10 years. Let's zoom into 2017, and its stock price is growing much faster than Visa at 22% versus Visa's about 17%. That's a significant difference in stock price growth. Now, since 2019, Mastercard is massively outperforming Visa as well. Visa at 9% compounded annually and Mastercard at 14%. So that's what I mean. Mastercard, since about 2017, looks like it's really been growing much more rapidly than Visa. And it looks like that has translated into the stock price growing more rapidly than Visa as well. What we got to do, though, is take a look at the price of these businesses. Like, what is Mastercard and Visa's price to free cash flow now? And Mastercard's price to free cash flow is sitting at about 31, and Visa is sitting at about 23. So Visa is selling quite significantly cheaper in terms of free cash flow than Mastercard. And this is a pretty big discrepancy. I mean, Mastercard is probably selling about 40-ish% higher than Visa in terms of free cash flow. Visa is growing slightly slower than Mastercard. Like Mastercard isn't growing, 40% more rapidly than Visa. It's growing like a few percentage points more rapidly than Visa. So basically what that means is you're paying a 40% premium on Mastercard's stock today for a few percentage points of extra growth, which I think is expensive. So personally, just for me as more of a value investor and someone who really cares about valuation, I actually think that Visa is looking much more attractive right now. So let's zoom out throughout history. And what I've noticed is that Visa's historical price to free cash flow is quite volatile. I mean, we have areas over here where the price to free cash flow spikes up to like 44, and then it drops down to 27 within like a month. This is the same story for the company's price to operating cash flow. We can see right here, it's just been quite volatile. So what I want to use in this specific case then is a price ratio that is much more consistent and stable over time. When a metric is more stable, it's just easier to compare it against history. So I was taking a look and I found that Visa's price to operating income and Mastercard's price to operating income are very stable over the past, just throughout history, like over the past decade. We don't really have those massive spikes. So when I'm taking a look at these two companies in specific, I notice that the price to operating cash flow is the most stable and consistent. So that's what I want to use in this example right here. Now, when we take a look over the past decade, we can see that Mastercard's average price to operating price to operating income has been about 25, whereas Visa's has been about 22. What this means is that the market over the past decade has valued Mastercard higher in terms of its operating income, again at 25 versus Visa. So the market historically just values Mastercard higher, probably because the company is seeing slightly more growth. Now, over the past 5 years, the discrepancy between these two companies' price to operating income becomes even larger. Mastercard's is sitting at 30 over the past 5 years, and Visa's is at 25. Now, if we go and take a look at these companies right now, Mastercard's price to operating income is about 23.7, and Visa's is about 20. And if we compare this to these companies' 5-year averages, it's very low right now. So these companies' price to operating income, both of them are selling quite below their averages, but I still think that Visa is the company that is looking like more of a value stock. Now, what's also interesting though, is if we zoom back out here to like 2012, okay, there has been multiple times throughout history where Mastercard's price to operating income is in a line or below Visa's. Right here in August of 2016, for example, Mastercard's price to operating income was slightly below Visa's. This also happened right here in 2013. And right here in the stock market crash of 2020, if we just zoom in a little bit, the price to operating income for these two businesses got very close. Visa was about 21.6 and Mastercard was about 21.8. Basically, what I am seeing here, there are times throughout history where Mastercard is selling for the same price ratios, if not lower price ratios than Visa. And I think that this would be the time to really scoop up this company because it is the company that is growing more rapidly. It's growing its revenues more rapidly. If you are patient and can wait for the times where Mastercard is selling at the same price ratios as Visa, then you essentially would be getting all of that extra growth, that more rapid growth for basically the same price. Right now, I think that the discrepancy between Visa's price ratios and Mastercard's price ratios is quite significant. And I think that Visa, in my own opinion, I'm not a financial advisor, but in my own opinion, I think that Visa is the stock that is looking much more valuable and much more cheap. I mean, again, if we take a look at the price to free cash flow right here, Visa is now selling for a price to free cash flow of like 23 versus Mastercard's 31. And a 31 price to free cash flow in this market, I still think is quite expensive. What we can actually do is take a look at these businesses' free cash flow yields. And this tells you how much cash the business could return to you if it wanted to pay out 100% of its free cash flows today. And Visa's free cash flow yield is now sitting at about 4.3, almost 4.4%, and Mastercard's free cash flow yield is about 3.3%. So Visa's free cash flow yield is much higher than Mastercard's, and Mastercard's, interestingly, is below the 10-year bond. So Mastercard's free cash flow yield is below the risk-free rate now, and Benjamin Graham would say that that means Mastercard is not selling for a margin of safety right now, whereas Visa's free cash flow yield is above the 10-year bond and what it can offer, or the risk-free rate. So since Visa is able to deliver more to shareholders than a risk-free bond, it's selling for a slight margin of safety. Not a major margin of safety, but definitely has a small margin of safety versus Mastercard's negative margin of safety. Investors are essentially paying a premium for risk buying Mastercard's stock at a 3.3% free cash flow yield if they could go and buy a 10-year bond and get, near 4% now today. So that's kind of just my thoughts on Mastercard. I think it's a fantastic company. Like, honestly, you guys, I think Mastercard is a fantastic company. I think Visa is a fantastic company. But when we're comparing these two companies, I think you're getting a lot more value by buying Visa. That's, again, just my own opinion, not a financial advisor, but that's just my own opinion. I just think that Visa is a much more valuable company right now at its current price. If Mastercard came down to the same price ratios as Visa, then I would think Mastercard is the better buy, but that's just not the case right now. Also, we have this metric right here, the free cash flow yield on cost. If you were to buy these stocks, back in 2010, for example, what would your free cash flow be on those shares purchased in 2010 today, now that the company's free cash flow has grown? And we can see right here that Mastercard's free cash flow yield on cost in 2011 would have been about 26% and Visa's would have been about 29%. What I'm also noticing is that throughout history, Visa's free cash flow yield on cost, for the most part, has been higher than Mastercard's. So what that means is that the investors who bought Visa throughout history have a higher free cash flow yield on their cost basis today than an investor buying Mastercard. So in terms of how much cash these businesses can return to you, historically buying Visa actually would have been the better option. And this happens because investors historically have paid a premium for Mastercard's extra growth. And they paid a pretty significant premium for a few percentage points of extra growth. And when you take a look back at history, that has led to Visa actually yielding more free cash flow on cost for their investors as growth has passed and as time has passed, which I just think is really interesting. I just think it's really cool to see this metric and see how that's all played out. But that's basically my thoughts on Visa versus Mastercard. And let me know what you guys think down in the comment section below. Do you guys agree? Do you prefer one over the other? Are there any other stocks that you would like me to add in, like PayPal or maybe even Square? I don't think that those businesses are quite the same as Mastercard and Visa, but could still be interesting to take a look at. If you enjoyed this video, please remember to leave a like on it. And if you're new here, then please consider subscribing to the Stock Unlock YouTube channel, because we make a lot of content like this focused on the stock market and stocks in specific and analyzing them. Also, if you want a 14-day free trial to Stock Unlock, there will be a link at the top of the description. This is the best platform for investors, you guys. If you use Stock Unlock for 2 weeks to a month every day consistently and use it to help you analyze stocks, you're going to become a better investor, pretty much guaranteed, okay? If you take a look at our Stock Unlock insights and see how we score stocks and look at all the key fundamental data that investors pay attention to, then you can find a lot better stocks, a lot better investments, and avoid some seriously bad investments in the market simply by taking a look at our insights and getting basically an instant report on that company's fundamentals and its financials. This is an awesome platform, and we've also just released a weekly newsletter that we're writing, and we send it out every single Friday. So if you want our weekly newsletter on stock picks and what's going on in the stock market, then you can head over to stockunlock.com and enter in your email in our little newsletter section right there, and you'll start receiving our free newsletters as well, along with some updates on the platform as we make them, because we're doing a lot of work on the platform right now. So yeah, that's going to wrap up the video though. So thank you again, everyone, so much for watching. We truly do appreciate it, and we really hope to see you all again in our next video.